Hello, everyone, and welcome to 2023. This is our special year in review episode, and with me, I have Jamie Holland. Jamie, thank you for being here.
Thank you, Lubna, for having me.
Yes, I'm very excited. We're going to speak about all the exciting things that happened in 2022, and I think you're the perfect person to do that with.
Well, I hope so. We'll see.
Now, before we get started, please introduce yourself.
Sure. Hi, I'm Jamie Holland, and I'm responsible for what we call Canada Industry Solutions, which is an IP organization, so focused on primarily the software business, but we also have a strong business consulting practice within my group. And the areas that we focus on are wealth management, institutional investing, and insurance, and insurance based primarily in the data area. So, yeah.
That is really interesting. That and very comprehensive portfolio. Mm-hmm. So we'll get to some of those areas. Now you mentioned wealth, so let's start there.
Sure.
So wealth management had a pretty big year in 2022.
Very big year. Yeah.
Yeah. What were some of the things that occurred? Some of the events?
We really had a wonderful year, actually, in the wealth management space. I think we crested the hill for our digital wealth platform area and became sort of the market leader in that domain during the year, which was fantastic. We had several wins with some major players and also solidified our position with some of our major accounts as well. So that's been very exciting for the team. In funds, we had a very, very big year. We won a major contract with IGM, and that brought a whole new product and a whole new team to CGI. And then shortly thereafter, a couple months later, we did a very similar contract with CI, which also included operations. So we brought all of their team CGI, almost 270 people, so very major change for us. In other areas of our business, the FX business is going strong. Our fund accounting business has been doing well, and has a strong partner in RBC, which is one of the key players in the market. So really a very good year all around for the wealth business, for sure.
Yeah, sounds like a fantastic year. Mm-hmm. Now, CGI had a great year in wealth. Mm-hmm. What about the industry? What were some of the major milestones that occurred?
The industry has been undergoing a lot of change because I think, and maybe for the first time ever, it's becoming a real driver of revenue and profit for major financial institutions, and they see the shift to asset management, wealth management as a key part of their strategy. And because of that, there's a lot of investment going on in the wealth space. So we see major transformation programs being kicked off by most wealth providers. So it's not one or two, it's all. And that means great business for us as well, because they need help from firms that have deep knowledge in the domain, and we're the largest player in that space in Canada. So it's a big deal for us. It's been really awesome in terms of the amount of business that's come our way, and for the industry, I think it's a nice change because there's a recognition that they have to be digital, that the digital transformation applies to the wealth business as well. And so we're seeing a major investment in that area, and that major investment is not coming from the bottom up; it's coming from the top down. So it's coming from the advisors, from the clients, and so it's a real organic change for them. So.
Yeah, well, you mentioned all of CGI's wins, mm-hmm. And obviously for the industry has been going through this digitization for the past several years, and COVID definitely accelerated things, particularly with onboarding. So what are some of the areas where CGI's products are excelling that's allowing us to have all these wins?
We made a decision years ago to invest in the idea of platform. And so, we actually have a platform team that underpins all of our IP. and that platform team builds a set of digital capabilities that can be used effectively across all of our different products. That to me is a key reason why we've been so successful. Without that, I think we would have multiple different strategic directions and different technology platforms, and because these domains are big, it's not like it's a small portfolio versus funds. I mean, they're huge domains in and of themselves, and so having that digital platform has really been a very important aspect of that. And so when I think of why, I think of the concept of platform. I think the industry has been looking for and needs platformization. And to me, that's really about having strong data capabilities across the back, middle, and front office that's integrated. And that's what the digital transformation that is all about. Onboarding is a great part of that. And it's one of the highest touch points for a client. It's the most important touch point, really, because it's the point where the advisor and the client meet and make their most important connection and decisions. But it's just the first touch point. There's touch points every month for the rest of the time that an advisor has that client, and that's it could be 20, 30 years, right? So having that become digital, having the integration digital, and having that platform to underpin it is critical. I think this is a lot of what the digital transformation is all about, and it's funny because I think some of the firms that we deal with, our clients, they can't articulate what's wrong, and so they go after different pieces of the puzzle. But fundamentally, what's wrong is they don't have a platform that allows them to serve all of their clients, all the segments of clients that they have from a single place. And for us, that's been what's been the generator of our growth. So,
I completely agree with that. On the point of platformization, the way we view platformization on our team in consulting is that platformization, it's not just one piece of technology. It's connective tissue that connects the different technologies together. So even for a front office advisor, they usually have their own different software for the investment, the onboarding, the financial planning, and usually those tools don't speak to each other, which makes their job a lot more difficult because they may have a good information on one side and then they have to manually pass it on to another application. Instead of it, they're just being in this free flow of information, this connection existing between these different applications. So I can definitely see why investing in an approach that kind of synchronizes everything and gives it one home instead of just, being siloed out is a key for success.
Yeah, I think you're right. I think most of the advisors have, and a lot of the advisory practices choose their own tools as well. So there's bits and bytes all over there. And it's hard for you to get a real integrated experience from that. And I think this is what the firms are tackling. And this is what the advisors are asking for. We do our advisor survey. And what we hear from the advisors are some fairly straightforward things. We're open to change. We need digital, right? And I think the third thing is we want to have integrated data that allows us to see what's going on with our clients at all times. And that hasn't been their experience to date. Their experience has been, I have one tool for this thing, I have another tool for that thing, and they don't talk to each other, and I have to replicate all the information. And I think the other part of that is they've been focused on delivering financial plans that are totally disconnected, in fact, paper-based, from the experience. So there's no integration, there's no end-to-end integration for the relationship between the advisor, their clients, and ultimately the firm. And this is why platformization is so important. It's really about managing the data in the middle of that equation. And you might think of it as a middle office application in a way, because it's the investor book of record, but it's tied into everything. It's how they onboard, it's how they get statements, it's how they get performance reports, it's how they get changes to their investment framework, their rebalancing of their portfolios. All of that has to be hanging off of one chassis for it to work properly. And that's the big change we're seeing as well. A real focus on that.
Yeah, and I think that is a positive change. Mm-hmm. I can say, coming from the industry myself, it wasn't a very pleasant experience having to go to 10 different places to get 10 different things.
Right.
And that's no way to achieve scale either, because as we saw in our Voice of the Advisor survey, advisors are offering so much more to their clients today because client expectations are higher, and they're partially being set by players outside of the wealth industry. So, Amazon is a good example. They're used to Amazon, giving them what they want before they even know they want it. And so they're like, well, if Amazon can predict this, why can't my financial advisor, where, a very important part of my life, my financial assets reside? Mm-hmm. So that's definitely been a change that they've had to accommodate and try to keep up with, and having an approach that makes their lives easier and helps them streamline is for sure going to be a positive change for everyone.
Yeah, for sure. It's funny because for most of us, the tools that we have at home are better than the ones that we have at our office, right? And it's true even on our phone, right? So, and we're so used to that. Uber is obviously the easy example of that, right? It's a simple single screen application that does so much for us. And we don't have that experience at work, and especially for advisors, they definitely don't have it. So this is what they're asking for. They want to have a simplified way of managing their relationships with their clients and making sure they're delivering great value. And it's regardless of what that value proposition is. Whether they be an advisor who views themselves as an investment manager, or an advisor who views themselves as a planner, or an advisor who views themselves as a life coach. Regardless of how they view themselves, they want to have the right tools to deliver that value proposition. And right now they don't. So that is the big change that's happening, and that's the big focus that these firms have now. And it's about time. It's been a while, and I think now the firms are starting to see that the issue is really in the data in the middle layer that supports all of this capability, plus all the experiences themselves. And you think about the client experience as critical, but you also have to think about the advisor experience and the middle office experience as critical to that whole equation. So a lot of work being done to make those changes, and of course we're at the forefront of that, which is exciting. And I think it's what makes us proud with what we're accomplishing and achieving for the industry. It's really helping the industry move forward. So it's exciting.
Yeah, I mean, and that middle office piece is usually, forgotten sometimes, just because it's not, the client's not seeing it, the advisor's not seeing it. I know from my time in the industry, the middle office, we just knew that we sent our requests and they went somewhere and they got done. It's not really an area that has much visibility. Now, if we do go sort of shift back to the client and advisor for a second, another big shift that we saw with our Voice of the Advisor survey, besides offering more services, was that advisors were trying to provide, plans and more comprehensive sort of interactions and meaningful interactions really to their clients. One of the ways that we're trying to achieve that was through financial planning. But as you mentioned earlier, that can be difficult because sometimes you have 47 pages that you spend 6 months building and then they get looked at once and they're forgotten. So there has been a shift now where firms are trying to invest more into financial planning, get better tools. I'm curious, What's CGI seeing? Like, are we doing anything in that space, or do you see anything interesting happening within the industry overall when it comes to financial planning?
Yeah, no, it's a great question. I'd say you're right. Traditionally, financial planning has been a very powerful set of tools, by the way, but run by financial planners. You had to have separate meetings for them. You had to bring a whole host of data, which might have been difficult to find. And, in the end, there were a lot of people who just didn't want to go through the hassle of doing it. And then when it was done, it became a paper document that came to you, and that paper document kind of just sat in the desk somewhere, so very valuable for the first month, and then not so valuable going forward. Now, when I say very valuable, I mean valuable in the context of, your retirement plan, if you're planning to leave a legacy, doing trusts for your kids, all of these things, very, very valuable. So how do you make that something that's a living document, I think is the question. And that's really where I think the focus shifted to in financial planning, which is how do you make that an ongoing experience, something that actually flows, and is a key part of the relationship between the advisor and the client, as opposed to between the financial planner the advisor sent the client to and the client, right? So it's in a sense it's simplifying, but it's also still a very powerful set of tools that allow the client to make very good decisions about their life, and these are tax decisions, insurance decisions, estate decisions, so on and so forth. What to do with my corporate versus personal accounts, and so on and so forth. So there's a lot of capability there, and so for us, we're looking at that and thinking about that living document, that living set of tools, and how do we deliver that and make it part of the advisor experience with the client. We've been investing with one of our clients in building a set of tools, and we'll be launching that more formally in the coming months. So that might be good for next year's retrospective, more so than this year's. But that set of tools already has 2 or 3 years of build behind it, so it's not going to come out of the gate as new. It's going to come out of the gate as in production, and a powerful set of tools that allow it to happen. And I think that puts us at the forefront of the industry. So very excited about financial planning and what that means for us, but probably more detail to come in the next few sessions.
Yeah, that sounds very exciting. Mm-hmm. And to your point, financial planning is a very powerful area. And instead of having that 50-page paper document now, it's trying to deliver things in chunks. So let's not talk about your retirement, which might be like 40 or 50 years down the road. Let's talk about the vehicle that you want to purchase in 5 years, or the home that you may want to buy. And that is definitely a great way to keep clients engaged with their, obviously their accounts, but also it helps build loyalty, right? Like there's a stickiness that gets created, and which has become very important for advisors, because the last thing they want is attrition. They don't want clients to jump ship because some other firm is offering some newer, fancier tools. So, building that relationship, having that humane touch to it's very important.
Yeah, it's interesting. I mean, traditionally, the high-end financial advisory practices have avoided clients who didn't have enough money, and so it's kind of a shift that we're seeing, which is how do we capture the future affluent early in their lives, and help them with their goals through life. Which ultimately will come to retirement and legacy, which are like the sort of end goals for most people. So it's an interesting challenge that it poses as well, because the reason why advisors tended to avoid people who didn't have $1 million or more to invest was because it was expensive to support them, and there wasn't enough margin in it. And so this is part of platformization, I think, as well. So it's not just about financial plans; it's about having all the underlying tools, and the efficiency that those underlying tools bring, and allow you to make profit even with a client who doesn't have, $250,000 or $100,000 for that matter, knowing that those clients at some point in their lives are going to be affluent and likely to have, be a major part of your practice. So it's an interesting difference and change in how the advisory practices are thinking about people in general and segments.
I mean, a big trend in wealth is, of course, the transfer to the next generation. Mm-hmm. So advisors need to figure out how to, maintain, retain, and attract these younger cohorts, because again, it's not good enough to say, I'm going to wait for them to come into this money and then I'll pursue them. You have to build these relationships much sooner so that they trust you and they're willing to have you be a part of that process when it comes to their wealth plan.
Mm-hmm. Oh, yeah, for sure. Yeah, I think the stat is that 80% of transferred wealth to the next generation attrits or leaves the practice. So very major loss, and that's been a big focus for most advisory practices, is how do they retain that wealth. And part of the challenge, of course, is what's important for the older generation is not necessarily what's important for the younger generation. So I think this is where financial planning has become a much more valuable tool, is because it can focus on goals, which has become a sort of center point of financial plans. And those goals don't have to be retirement or legacy. They can be, as you said, purchasing a car or a house, or going on trips, whatever the case may be, as that set of goals. And the key about the platform that we deliver to the market is that it allows you to efficiently deliver that service, so you can do it in a way that makes money as well. And that's not been the case in the past. For lower net worth clients, it's been very difficult for a firm to make money at them, and for that reason, the advisory practices have tended to avoid them. But the challenge is that those lower net worth people become the higher net worth people over time. So it's capturing them when they're when they're up and coming. That's what's important, I think, for those practices as well. So that point of generational wealth transfer, or even just capturing new clients who are leaving other practices, is important to the growth of the advisor business. So
that makes sense, and part of it is obviously advisors being able to again have these meaningful interactions with this younger cohort, because you do have advisors who are older, and so they may be considered a bit out of touch with the younger generations. But I've from my own experience, this is a bit of anecdotal, but I've been in touch with some of the folks that I know in the industry, and it's been interesting to see the different approaches that different teams are taking to have these meaningful engagements with this younger cohort. ESG has been a pretty big driver, just because the younger generation tends to be more environmentally and socially sound. That it's just something that they care more about. They want to invest in it, and they really want to engage on topics that are meaningful to them. So seeing this shift has been interesting. And when we speak about ESG, I recently saw I believe it was a Bloomberg intelligence report that predicted there'll be over 53 trillion USD in assets in ESG by 2025, which I thought was very interesting.
Yeah. Yeah, it's interesting. Well, I mean, ESG is a funny thing, because I think most firms are trying very hard to come off as ESG friendly firms, right? So, and you look at even oil producers are positioning themselves as sustainable, which is hard to reconcile in some ways. But it's certainly part of the lexicon of the day. I think the other part of that is that performance also matters, right? So it's both. It's both being social and performance, and delivering on the performance that most people are looking for. The younger cohort especially is focused on this, and you're absolutely right. I think you'll see much more money going into sustainable funds, sustainable firms as well. And so that's part of what we have to prepare ourselves for as an industry. I think is that's a big part of who we're going to be and how we're going to operate. For us, we've looked in two ways at this. And first off, we have a consulting practice that focuses on ESG. So our consulting team is helping firms think about how do they primarily how do they measure their activities so that they can demonstrate that they are ESG compliant firm, and then of course from a platform perspective, we focused on how do we track the securities appropriately so that we can, especially in the models business, so in the managed account business, how we can demonstrate that we're supporting the wishes of clients and delivering an ESG friendly set of investment vehicles. So yeah, it's a massive focus area, I think, and we're going to see a lot of growth. I think you're right. I think it's going to continue to grow because it is more and more important to, I think, all generations, younger generation for sure, but I think the older generations are now very much aligned with that thinking and also investing in the same way.
Absolutely. And our last episode of WealthChat was all about ESG, and we spoke a bit about greenwashing. So that idea of oil companies being ESG, to your point, can't be difficult to reconcile with. But I will say that I've noticed across the industries, all the players have been trying to make an effort to change and to do better, which is nice. It's comforting to know that everyone really is in this together, because we do have industries that come together, including the oil and mining sectors as well, that are trying to have better and more improved processes so that they have less of a carbon footprint. Obviously, can't avoid all of it, but at least it's a step in the right direction. Now, I wanted to hear a bit more about CGI and ESG. So we, of course, have the ESG consulting practice, and we had Matt speak about that last episode as well. In terms of tooling or product, is that something that CGI is investing in?
Yeah, very much so. So we're looking at, again, how we track the compliance, ESG compliance of the underlying assets. And in a way that has to line up in the security master of the product. So we have to be able to say what's sustainable first off, or what's ESG compliant, and then how do we track it on an ongoing basis and make sure that there's a set of constraints that are set up for the accounts so that a client can make a selection for sustainable. That's handled typically in a very simple way these days, which is, you have a set of ETFs that are sustainable ETFs or a set of funds that are sustainable funds, and those become the basis of a portfolio for a client. But I think going forward, we'll see that in the managed account space especially, you'll have to track those securities much more diligently than we have in the past. And so for us, we're just making sure that the platform is capable of doing that. It's up to our clients to actually implement it and use it appropriately. So we're definitely setting ourselves up for that, and we're supporting our clients as they move in that direction. So.
Yeah, that's great. All we can do is have the tooling available to them and hope that it gets utilized appropriately. Now, you mentioned compliance, and one of the big things that happened in the industry in 2022 was the amalgamation of IIROC and MFDA from a regulatory standpoint. So, for the past decade, maybe even longer, every couple of years, we would hear some chatter about a merger between IIROC and MFDA, and then it would go away. This time, it didn't, and it's actually happening. So what are your thoughts on this, and what do you feel are some of the implications?
Yeah, no, I think it's a smart move, a fantastic move. It's always been odd to me that we had two regulatory bodies that did very similar things. And certainly, yeah, you're right, we've been talking about this for 20 years. So it's great that they've finally come together. What does it mean? I'd say I'm not sure it means a lot in the short term. And it seems to me that the MFDA firms are going to continue to sell what they sell, which is typically funds and some ETFs now as well. And so it broadens their product set a little bit. But that's going to shift over time, and we'll see, I think, over the next several years, a broadening of capabilities. So the traditional MFDA firms will broaden the set of things they offer and probably get more heavily into the managed account space. I doubt they're going to get into commission-based trading, though. I just don't think it's something that would be a focus for those firms. And then the other side, I think, for the securities firms that have everything, they've been shifting to a fee-based business anyways, and driving towards the sort of managed account based set of portfolios for the clients. So I think that's going to just continue. I don't see it changing for them. I think overall, maybe we'll see a few more mergers than we have in the past as well, because of that change. So, yeah, I think it's a very good thing for the industry, and from our perspective, it's we can support both, and we do, and so not a major change that has a lot of implications for the way we operate.
Yeah. Well, I imagine there's probably more enhanced consumer protections now, and I did read something that was speaking about the merger and what it means for consumers, and the idea was that you now have one body that you can go to instead of two, and so everything will be a bit more streamlined. Sure. They'll be quicker to address any grievances, and it won't really be jumping back and forth between the two, which I think would be helpful. You mentioned fee-based, and I think that's another trend that has been happening in wealth management for the past several years, and for the right reasons. And we spoke about some of the reasons for why it's happening. Financial planning is a good example. Advisors are doing so much more than just trading. They're providing all these additional services. And so how do they get compensated? And fee-based, where they're charging one of the schemes anyways is where you charge for a percentage on the book. That seems to be a step in the right direction in terms of compensating advisors appropriately for all the work that they are doing. So I would say, have you seen or do you predict there will be some major shifts in fee-based in terms of how fees are charged? For instance, we've seen ideas of subscription being floated around. Or just tiered?
Yeah, no, I mean, I suppose there's lots of different models. In the end, it's all a proxy for cost and margin for the firms that deliver the services to their clients. If I think about the shift for fee-based, and the reasons for it are primarily about delivering the best service to the clients, I think, and that's the advisor's perspective on it, and doing that in a way that's profitable as well. And fee-based works from that perspective. The focus at that point becomes, how do I support my client in growing their assets as quickly as possible? Obviously, they make more money as the assets grow. So there's an incentive for the advisor and the client are fully aligned at that point, which I think is high value. So to me, that's an important part of that shift. The challenge with the transactional business was that it had a set of risks involved in it, and there were a lot of compliance issues that were floated because of that. And it is, you're able to be a bit tighter on compliance in the fee managed business. So from a firm perspective, it's better as well. It's more compliant. It aligns the interests of the advisor and the client, and it delivers the most value. In terms of where the fee structures are going, are they going to do a subscription? Perhaps. I mean, I wouldn't be surprised if a firm came up with that idea, because there's always some way of grabbing more assets and growing your business. But generally speaking, I would say it's probably going to stay as a percentage of the assets under management. And you see that even in the robos, which are 40 basis points, up to say 150 basis points in an advisory practice, and there's blends in between. That's kind of the range that is generally accepted as the important range to deliver value and service and margin to the clients. So in the fee-based business, so I suspect that'll stay, and we'll see that remaining. There's always a new challenge to that, and I don't want to predict the future because it's hard to predict, right? So, but that's my take on it.
Yeah, there's a lot of possibilities for the future.
Sure.
I do feel that the fee models conversation is interesting because there are fierce debates about it, and they've been had for a while now, and there are smaller players that have introduced a subscription, but again, they're small and they mainly deal with financial planning, but it's what you would call light financial planning, so financial planning for the moment or for just the short term. So it'll be interesting to see how it all shifts and actually finally settles, because I feel that now that firms are going through this digital transformation, there's all these changes happening with their models, but also with regulations, that it's a good time for them to create some good foundations for the future of how they want their practices to be.
Yeah, I think the concept of investment management as the core part of your practice is something that's sort of a thing of the past. Because the view is that investment management has a value, and it's well known in the industry. It's what the robos offer, 40 basis points, right? So from that point on, it's about advice and coaching and financial planning, the other aspects of a service that an advisor can bring to bear. And I think for the mass affluent and the high net worth alike, it's challenging to navigate the markets, and it's good to have someone who knows what they're doing on your side that you can talk to about it. It's tough to do it from a robo. Not that robo's wrong, but it's good for some people, but it's not good for most people. Most people need advice, need coaching to make the right decisions. And the right decisions happen at points in time, when the market goes down, when the market goes up. That's when people tend to make the big mistakes. And that's when making the right choices makes the biggest difference as well. So I think the role of an advisor and advisory practices are not going to change. I think people need that help. Yes, the pricing models might get adjusted, but in the end, it's going to be the same ultimate pricing. And doing a simplified model for a subscription price of a financial plan, is that the best answer for most people? Probably not. For some people it is, though. The people who have probably a clearer and sophisticated view of the markets and are able to make those choices themselves, right? So.
Yeah. The robo tends to be for, again, those smaller, more targeted strategies. But True. To your point, advice is essential, and it's sort of the backbone of the wealth industry, of financial management. And really, you see the value of that during volatile times, because during good times, during bull markets, everyone's happy and you can essentially throw a dart, just as it was a few quarters ago, and you'll hit green somewhere. But it's when things take a downward trend that you need someone in your corner who's level-headed, who understands, and who's able to guide you appropriately. So I definitely agree with that. Now, I did want to touch a bit on Regtech as well, because we've been speaking about compliance. And that's been a very big area and an area that continues to grow, mostly because there isn't really a choice there. You have to comply. So what are your thoughts on Regtech and what's happening there?
Yeah, so I'd say that there's different aspects of this. When you're talking about wealth management, it's been about having the right tools to support client reforms and the regulations around knowing your client, knowing your product. And I think most firms have been quite successful in setting up the right tooling for that, and that those tools and that work has actually improved the value that they deliver to clients and maybe helped them to grow their business as well. And that probably wasn't what they thought when they saw another regulation coming at them, like, oh my goodness, I have to prepare for this thing. So, I mean, in a way, Regtech is becoming an important part of the business because that compliance actually helps you to build and grow your business in some ways. For the markets, I think, for the sort of sell side, if you will, I think Regtech is, it's something that we're looking at very carefully and investing in right now. I think that there is a lot of regulation and a lot of different regulators that are gathering the same data in different formats. And so there's a huge opportunity for us to deliver a service to our clients to help them gather that data once and deliver it to multiple regulators at the same time. So, and you can especially see that in derivatives, in some of the more complex type of trading activity. All of the different regulators involved in that process makes it challenging to operate as a firm. So simplifying that is a big opportunity, I think. And some firms have done it really well, some firms not so well. All are investing in making that happen, I think. So something we're looking at very carefully.
That's really fascinating. So really taking this data that's probably in different forms to meet the needs of these different regulators, but essentially the same data, and structuring it so that it could be applied to just whoever needs it.
Yep.
That sounds like a winning solution right there if it can be built.
Sure does, doesn't it?
Yeah. It does.
Yeah, no, I think for clients, they really see the opportunity as well. It's because and it's very obvious that it's the same data going to different players and different formats. So, what better thing can you do than to simplify that? And it also allows you to simplify the gathering of that data and the comfort level for the risk group inside the organization as well. And I think that's an important part of operating these businesses, because we've seen what's happened when some of those regulatory bodies are not conformed with, and we've seen some massive fines, hundreds of millions of dollar fines for certain financial institutions. It hasn't happened so much in Canada. We've seen a few smaller fines, not big ones, but we've seen the very large ones for some of the European banks, for sure.
Yeah. No, that's. It's really interesting. And again, I feel like when it comes to compliance and regulations, there's a bit of a negative view because it's always about red tape and restrictions. But it seems like there's a lot of room for innovation as well, and room for growth and to do some really exciting things.
For sure.
Something that I was really fascinated by, I was on a webinar a while ago where they were speaking about CFR, and one of the panelists had mentioned that their firm was working on having AI and ML to help with client-focused reforms, where now that there's KYC and KYP, there's a lot of information for advisors to know and pass on to their clients. So their idea was to use AI to assist advisors in picking out the information that they had to know, that they needed to disclose. Mm-hmm. So you may, for instance, have like a 50-page document and you really need to know 3 pages worth of information from it, and the AI would go in there. It would highlight the information that you actually need to know, gather it all, and bring it to you so that you had the correct disclosures and you're able to provide it to your client. And it's very streamlined, provides a lot of scale, because now when I think about it, the advisor has the ability to actually explore more options because their life has been made easier by this tool that's assisting them in siphoning off the information that they need instead of them having to go and read 50 pages of disclosure for each asset that they might be interested in.
Yeah, no, for sure. Yeah, I think IA is going to become more and more important, or AI, sorry, a more and more important part of how firms operate their business. I think it's in operations, it's in tooling for advisors, it's in chatbots for the clients. So it's in multiple different ways that artificial intelligence technologies, machine learning are going to become important parts of how we operate. I absolutely see that happening. For sure. One layer beyond that as well that we're starting to hear more about is behavioral science. Because AI is really about data science. It's about crunching the data. But behavioral science is really about understanding what your client's saying to you. And so it's taking CFR sort of to the next level, which is to say, is the client actually aware of what they're saying? Are they saying the truth to you? And are you able to actually think about how you add a series of additional questions to drag out the right answer from them? So it's an interesting next level that some of the firms are starting to think about more carefully.
Yeah, I've been seeing personality assessments a lot more, and I think that's related to it. So knowing which of your clients are just naturally more attuned to aggressiveness versus being more conservative or balanced, and then being able to derive insights for those particular clients. So if the markets are very rocky and a lot of volatility occurring, then your conservative clients are the ones that will tend to be a bit more nervous, and so perhaps those are the ones that you reach out to. So having a program or an application that brings that information to you, surfaces for you, so that you can easily make the interactions that you need to comfort those clients would be very helpful, and again, help strengthen those relationships.
Yeah, no, for sure. I think that again, that's part of what, and I think you're right. I think some of these tools are the things that allow you to get the real insights into your client's way of operating, and help make the right decisions on their behalf. Now, ultimately it's a client's decision, but helping them by asking them more questions, get to a real understanding of their underlying values when it comes to financial risk. That's a critical part of the advisor's job. So,
yeah, that I totally agree with that. Now, we've been speaking a lot about wealth because there's so much here, but you also manage insurance.
Yeah, for sure.
So I want to hear a bit about that.
Yeah, the insurance business has been a really fantastic business for us for a very very long time. We've actually been in the data business in insurance for almost 30 years. So it's kind of it's something that we've been just a part of the fabric of the industry for such a long time. And what we do is we gather data from all of the insurers about every accident, every claim, every missed payment, license data, underwriting data, and we have that data all available for our clients at the point of underwriting and at the point of claim, so that when someone's making a claim, for example, you have all of the information about how they operate, what they've done, how many accidents they've had, any previous accidents the vehicle has had, so on and so forth. So all of that data is available, and it's very transparent, and it makes for a much more fluid industry. And so we're very proud of our role that we played over the last 30 years in making that happen.
That's really interesting. We're essentially like a data repository for the insurance industry.
That's correct.
In the country.
That's exactly what we do. So, and we operate on behalf of pretty much every insurer in the country, and provide that data to them again at the point of underwriting. So, if, they know how many tickets you've had. They know if you've ever had a claim before. They know if you've ever missed a payment to another insurer before. All of that information is something that they have. So when you're filling out your forms, don't lie, because they know. Already. Yeah.
Oh, wow. So it's really interesting you say that, because I've been looking into insurance lately, in particular as it relates to blockchain, because blockchain is something that personally I've been very fascinated by the technology. I feel like it has a lot of applicability, but sometimes it gets meshed in with cryptos and some other stuff earlier on in its life, and it tends to kind of devalue it a bit because of its interactions with these other things. But I feel like that technology itself has a lot of applicability. It's just a ledger that's immutable. Yep. It has a lot of integrity, which makes it valuable. And I've seen that it's been used, again, for different things, such as subrogation in the U.S. It's also been used to help prevent fraud, so double dipping.
Yep.
I'm curious, do you see any worthwhile cases in the Canadian marketplace for it? Are there any that you've been investigating?
I think the promise of the distributed ledger has always been a shared set of data across multiple entities, right? So, and full security at the same time, so it's a very powerful capability. And you can imagine situations like, for example, we have organizations like FundServe that connect sellers of funds and buyers of funds. But if the sellers and buyers of funds use the same database, they wouldn't need an intermediary at all, right? So, and it could all be done in real time. So you can do away with the T+2 or T+3 transaction time. So there's an amazing opportunity there in that space. Similarly, in insurance. The challenge with the blockchain has been, up until very recently, the distributed ledger just wasn't fast enough to manage the transaction volumes that we were dealing with. So the technology is catching up, I think, with the requirements of the industry. At that point, it's going to become super valuable. And you're right. I mean, I think a lot of the distributed ledger or blockchain construct has been wrapped around crypto. And, crypto has had its own heyday. It feels like the shine's come off crypto a little bit. And that's probably a good thing because, in my mind, crypto is it's questionable fundamental value. Because, there is no means of production. There's no actual revenue. It's essentially it's an attempt to deliver a fiat currency without a government backing it. And so, there's value in that, and for sure that's why the value of things like Bitcoin and Ethereum and other cryptos have grown, but there's no fundamental value. There's nothing you can sell off. There's no assets. There's nothing underlying it. Right? So it's an interesting, and you see the impact of that, of course, when a down market happens. I think some of these different asset types are down 70, 80, 90% more. And of course, we've seen some exchanges go under completely with some questionable leadership as well, right? So it's been an interesting time for sure.
No, definitely. I think there's a lot of speculation in crypto. I will say personally, I do see value in things like smart contracting, which is what Ethereum came out with. I think there's applicability for that outside of cryptos. So it's really just taking this technology and applying it to more meaningful things than just speculating on a cryptocurrency.
Right. I totally agree with you. I think the blockchain itself is an amazing amazing construct and a big part of the future. And so we'll see distributed ledger technologies become the mainstay of how we're going to hold data, how we're going to share data, I think, going forward. And this will tie back into our clients' ability to a client's ability to make decisions about their data as well, right? Because we're going to see more and more regulation around clients' rights to manage their data.
Yeah.
And of course, the blockchain is a great way to implement those decisions, right? So as well.
No, I completely agree. And again, I see so much value in the blockchain, especially in insurance, because I've been seeing it being implemented in some very interesting ways. Like there's a health insurance provider in the U.S., one of the largest ones, they essentially created an app, and then the app generates a QR code that their client takes and shows to different doctor's offices, and all of their information gets populated right then and there. So they don't have to worry about providing their insurance information or someone like their own personal manual information to different doctors, because now it's all in this QR code.
Sure.
And it's just there for them, and it makes their life easier. It's secure. Yep. They can also give access to it for a particular period of time. So it's not for, indefinite.
Yeah, you think about the amount of money and effort that governments have put into having just a shared health record for their patients. And again, as you said, the distributed ledger can solve that problem very rapidly. So yeah, I think that's a big part of our future, for sure. And certainly we're investing in those technologies in a big way. We've looked at it in the wealth domain quite a bit. But we've actually had implementations in distributed ledger technology in some of our IP, like trade finance, for many, many years. And we're at one of the leaders in implementing that technology and getting it into the market. So yeah, 100% agree with you. I think that's an important part of the future.
Definitely. I actually had Louis Bateman on a few episodes ago, speaking about blockchain and digital assets, and it sounded like a very dystopian worldview, a view of it all, where we're all just going to live on the blockchain. But I do think there's, again, a lot of applicability and a lot of interesting things happening that'll streamline, also help create security for everyone. So blockchain has a bright future, in my opinion. Now, I do...
especially important when it comes to, and this is where the cryptos become valuable and why people see them as part of the future, is this idea of sort of Web 3.0, the shift to metaverse, payment techniques being cross-border, so managing that without transaction fees. That's where the value in some of those things become really valuable. And I think it's going to happen. But will it become the way we live? I'm not so sure. It certainly won't become the way I live. I might be on it sometimes, but I think that's true of and for sure the firms who are investing in that will have huge opportunities because of that. It's a couple of hours of 5 billion people a day would be a pretty amazing set of clientele, right? So, and this is where firms like Meta and others are really focusing and investing in that domain. So,
absolutely, yeah. Web 3 is all the hype right now. There was actually a Gartner report that came out recently saying that 75% of firms will have some type of interaction on Web3 with their clients. Yeah. So I thought that was very fascinating. Now
we built a marketplace now for our clients actually to practice in, if you will, and it's kind of like the idea of having a wealth branch in the metaverse, so that you can actually interact with your client, avatar to avatar, and have a face-to-face conversation in a domain. So it's interesting, and so I think that's going to be a big part of what's going to happen, and we'll see that change. But I still don't believe it's going to be the way we live our lives. I think it's going to be part of how we operate. So.
I agree. I think there'll be a balance that will be struck, for sure. Now, as far as insurance goes, what were some of the big things that happened in insurance in 2022?
Well, I mean, the insurance domain is a giant domain. I think the insurance industry has got a couple of big changes going on. On the sort of life health side of the insurance business, there's been a refocusing of those organizations towards wealth management, asset management. And part of the reason for that is they see the opportunity to grow their business and deliver great value to their clients by having a combined insurance, health, and wealth capability across for their clients and deliver an end-to-end service. So I think that's a big deal in that side of the business. On the P&C insurance side of the business, I think there's continued evolution in the way they operate. But in general, I would say that it's sort of been fairly steady. Of course, the fact that the chip market has been a little behind from a supply chain perspective has limited the number of vehicles that were sold, and therefore the amount of insurance that was requested. So we saw that reflected in the transaction volumes we saw as well. So I'm sure that's had a slightly negative impact, but at the same time, the number of claims is down, which is interesting. And of course, with the boom market that we've had for the last few years, the industry had done very well. Of course, this year's probably the opposite. Like all of us, we've all seen our assets evaporate a bit. So yeah, it's the insurance industry has been undergoing quite a bit of change. I'd say from a digital transformation perspective, it's about becoming more client-centric and delivering a higher value and faster service to clients. And that covers every aspect of the business, from the underwriting process and the speed with which you underwrite, the customer service side of the business, of course, the risk management, and then ultimately, what you do when there is a claim and how you manage that with your clients and deliver service through that. So, I think the firms have made lots of good decisions on ways in which that they can deliver great service and minimize their cost. And you see that in the form of firms setting up major centers where you can bring your vehicle after an accident, and they'll take care of all aspects of it right there, including repairs. Everything happens in this one facility.
Oh, that's very cool.
So it's a great way to manage costs, but also deliver great service.
Yeah.
Because that's been an interesting shift for some of the insurers as well.
Now, you when earlier on you mentioned combining everything from health, wealth, essentially end to end. Can you elaborate that a bit more on that? Like, what is happening there? Where they're now offering wealth services? Yeah,
I mean, I think insurance has always been a part of setting up the right kind of financial plan for a client, right? And so I think the insurers are realizing that they can operate outside of just insurance and more deliver that whole wealth experience as well. And of course, there are also the providers of all the health benefits that most of us enjoy as well, outside of our government plans, that is. So they're providing the whole gambit of service to most of the clients, and the broader and more end-to-end they can provide that, the easier it is to attract clients to their business. So I think they're recognizing that and investing to make that happen. They also see the upside of the wealth business and the profitability that they can make from that. So there's an investment there. And you mentioned MFDA and IIROC earlier, and the merger of MFDA and IIROC, that's certainly having an impact on the way insurers are thinking about their future as wealth providers. So,
right. Is there are they building in-house, or are there acquisitions and mergers occurring to provide these wealth services?
I think both. I think firms are there's some acquisitions that are happening, and certainly firms are continuing to rationalize. We see that happening, but I I think for a lot of these firms, they already have a sort of set of core services, and they're investing to improve the tooling and the platform that underlies that service so that they can expand it. And they can expand that organically, by either training their insurance advisors to become wealth advisors as well, which is very possible, and we see that in some areas, or to have a new advisory team and grow the advisor business using their network to take advantage of position proximity to clients.
Right. Yeah. It seems like a bit of friendly competition for the wealth industry with insurance moving in.
I think it's always been the way, though. We've always seen firms come and get rationalized, and I mean, this is certainly how the banks became market leaders in their domains through acquisition, and so I don't think it's new. I think it's just the next phase in the evolution of the business, and because the business has grown so much and the amount of assets have grown so much, there's more to go around as well. So I don't think there's a lot of firms who are suffering in this market, although this year's been a bit tougher than last year.
Yeah, no, it's interesting. I think with this shift to offering this end-to-end service, we've also seen big investments being put into client experiences by these insurance firms, making sure that front end is pleasant and digitizing as much as they can to make things more efficient.
Yeah, no, for sure. I think clients want to have access to their data, and they want when they want to see it when where they want it, right? So I think that's an important part of the service that you're offering now. And as we talked about earlier, the digital tools that we have at home are very good, and we're used to having access to data right away, and we don't want to wait. So the client experience has to echo the kind of experience they have from other firms or other tools that they're used to using. So that's meant a big investment, I think, for the industry. The other side of that is the advisor experience has had to improve dramatically as well, because you don't want to be in a situation where the client has more data than the advisor. So making sure both of those things happen has been, I think, a big challenge for the industry, and certainly it's not done yet. A lot of firms are still investing heavily to make that happen, which is good for us because it's the business we're in, and so that means that we're going to continue to grow and build our business, and certainly we're here to support the industry and are excited about the opportunities. So.
Perfect. Well, that answers my next question, which was going to be, do we have what they're looking for in terms of tooling and platforms, applications?
Yeah, I mean, it's an interesting question. Do we have what they're looking for? I mean, I think the industry is always evolving, right? So, and we have to always evolve as well. So if I look at, what the industry was looking for last year, I think, yes, we absolutely have it. What they're having next year, what they want next year, probably we have some work to do to get there, So I think we're in a very good position relative to our competition. I think we're probably the best of the firms that we see out there. But we could always be better, and I think the industry is always asking for more. So the opportunity to do the right thing is there for the firms and us. So.
Yeah, well, I would say that self-awareness is actually what helps us, because we're aware that there are things we need to work on. Sure. We need to improve to provide better experiences to our clients. Yeah, whether that's insurance or wealth. So
I mean, it's interesting because we've seen a lot of the impact of fintechs on the market. The nice thing about fintechs is that they usually uncover some very, very fine slice of the industry that can be improved, but it's usually a very, very thin sliver. So it's a great idea, but unless it's part of a connective tissue that we talked about earlier, the platform, it doesn't have a lot of value, right? So this is what we've seen a lot of in the last few years, which is the fintechs pushing us and our clients to make improvements in the end-to-end process, and doing it in a way that is part of the connected tissue. So it is exciting times for sure.
Absolutely. Well, one of the big pushes is going to be open banking, because this year in 2023, and I believe in the fall is when we'll finally get read-only access. So it's a step towards having open banking, and that will have an impact on obviously the entire financial industry.
Yep.
What are your thoughts on open banking, and do you feel that the industry is adequately prepared, or what needs to be done to get to that phase, at least for the initial process?
Yeah, for sure. I think most of the financial institutions we deal with have been investing in open banking at some level for quite some time, but it's been around the edges. It's not in the core of their business, and I think for most of the senior executives, they're not really even aware of the implications of it. What we see in Europe is that they've gone ahead and forced in open banking through top-down regulation, and it's allowed the financial institutions to rethink their business model in some ways, right? So they can decide what kind of organization they want to be, and you can imagine a situation where a bank is providing underlying banking services to multiple different other financial institutions who are operating as distributors only. So that kind of rethink hasn't happened here at all yet. There are people who are imagining that future and starting to prepare for it, I think. But they don't, we don't yet have the tooling in place to make it happen because the regulation hasn't forced the institutions to make change. So I think this fall will be a big shift for us, and as we get into even broader open banking, here you're going to see that the industry is going to have to react and make decisions about what's the role of each of the financial institutions that are playing in it. It's an interesting topic because really it comes down to data and ownership of data, right? And the concept here is that the client owns their data, and they have the right to have their data shared with who they want to have it shared with, and they have the right to take that access away at any time as well. So managing that is not so easy for an industry that doesn't have all of that data connected between different points. And so, there are organizations like FDX who've been there to help prepare all these firms with a set of standards that they can use for sharing the data. I think most of the financial institutions have spent money investing, building APIs to make that happen, but they don't have them really connected into the life breath of their organizations yet. And there's a very major set of work to be done, first off, to conceptualize how you're going to use it, and then to actually implement it. So.
Right. Well, it's really interesting because in Canada, we are fortunate in the sense that we are able to learn from the lessons of other nations, such as Australia, Europe. Yep. They've introduced it much more quickly than we did. So we have that to our advantage. But at the same time, of course, there's going to be pain points and hurdles that we have to get through ourselves.
Yeah.
And when it comes to tooling, do you feel that we have the correct tools? Because I would think that, again, perhaps because this has already been in existence in other places, we'd be able to get similar tools to them, or even get the tools from cross borders. I don't think everything has to be built in-house in Canada, as long as there's proper compliance and regulation behind it.
So this is for open banking generally, you think?
Yeah.
Yeah, I'm not. I mean, fundamentally, open banking is about sharing data,
right,
and giving people the choice to share it and unshare it, and being able to prove that you've given them that choice, right? So, I'm not sure that that's so much about. I'm not sure it's so much about tooling, because I think the technology to do it is not complicated, honestly, and we have standards that we share, and we share them across North America. By the way, so when I talk about FDX, it's a North American organization. So, I think really it's about defining what you want to do with that capability is the more important question, the more difficult question. How are we going to implement it?
Right.
And it's not just about giving clients data access. It's about, okay, well, how are we going to take advantage of that? What's that going to mean for us? Can a fintech now provide banking services and do it in a way that's that's disruptive to our business? And the answer is yes, they can. And then, okay, well, how are you going to respond to that as a financial institution? And what's your role in that?
Right.
So those are big questions for an organization that's run in a fairly consistent way for a very long time, right? So
it's true. Yeah. I mean, one of the things about at least the wealth industry in Canada is that we're very slow to change. It takes a while. So. Yeah. But I feel like that's changed as we become more digital. They've had no choice but to adopt, and so now there's more accelerated changes. And as far as open banking goes, again, it's something that clients are going to demand. Like if one firm can do something and they know they can do it, then they're going to ask why their firm can't do it. So it'll sort of be kind of like a dominoes effect where once one goes down, the rest are going to have to follow as well.
Yeah, I think that's right. I think what we've seen in Europe is that most firms have made decisions about how to make sure that they are providing a set of capabilities to their clients that allows them to conform to the regulations, but also take advantage of the opportunity. And there are lots of interesting, I would call them, sort of groups of firms who have come together to offer specific sets of services. So for example, there's a financial institution that just does loans, and another one that just does deposit taking and checking accounts, and they have a third organization that delivers that service to a client as if it's one financial institution. But the reality is underlying there are multiple institutions delivering the service. We've seen that in the wealth business for a long time. We've always had correspondent clearing, and in the U.S. market especially, we have sort of RIAs who are supported by the turnkey asset managers, the TAMP type services, and with multiple custodians like Schwab and Fidelity and others. So I think for the wealth industry, we've already had to deal with these challenges. For the banking industry, this is new and will be, I think, tougher change. So, in a way, it's kind of it's going to allow us to think in the wealth industry about aggregation in a different way. And we've managed aggregation with our clients, data aggregation through screen scraping and there's a few firms that manage it reasonably well. But going forward, I think all firms will have to think about this. And, for a client, they're going to want to know what their financial situation is. And their money will be in different institutions. So they're going to want to see that in one place. And that one place brings a big opportunity for someone to aggregate. And the risk, of course, is that that aggregator might be Apple or Google or or Amazon, and at that point, then the relationship between the firm and the client is intermediated by a major player. And what's interesting for young people, generally speaking, they have more brand trust and loyalty for brands like Apple and Amazon than they do for the banks that they deal with. So it's I think the short-term risk is not the thing that firms have to really worry about. It's what's going to happen over the next 10 years, and what's it going to mean for us as a financial institution in that period of time.
Right. Well, part of it, again, will come back to compliance and what even the aggregator is allowed to do. And because, I mean, if they have all the data, which Google pretty much knows everything about me, if I'm being honest,
yeah, sure.
There isn't much that they're missing. But again, like, are they going to be allowed to just package that data and ship it off to whoever they want? Or will there be very strict regulations around it? Like, I think about the GDPR regulations in Europe now.
Yeah.
And, all the warnings that Google has to provide. So if anyone out there uses VPN and they decide to use a European server, they'll see that if they go to Google, there's this whole plethora of disclaimers that comes up.
Mm-hmm. Yeah, for sure. I mean, but again, the underlying principle behind GDPR and open banking in general is that you as a client own the data. It's your data.
Right.
So if it's my data, I can share it with Google or Apple. It's up to me. And so, yes, they have to conform as well. And they have to prove that I've given them that access. But once they've proven that, then they can provide those services. So, I think it's an interesting time ahead of us, and we're going to see more and more financial services delivered through some of these institutions like Apple and Google and others, without them having to invest to build the underlying capabilities, right? Without them having to have major platforms that are OSFI compliant to do savings accounts or lending, for that matter.
Yeah, it's really interesting. Well, this has been a great chat. Mm-hmm. Before we wrap up, what do you envision for 2023?
Yeah, so 2023 is I think it's going to be. It's already been an interesting year. We've already seen the markets go through a pretty heavy gyration through 22 and into 23, and I think that's sort of going to continue. There's obviously the risk of recession, and there's a lot of conversations about what that means. But at the same time, there's also some optimists out there, including the Secretary of the Treasury of the U.S. and others, who believe that maybe that recession is not inevitable, and maybe we can hold firm on and get under control interest rates. And inflation, of course, so inflation and thus interest rates as well. So that would be a great plus for us if that started to turn the corner in 2023. And I think for the markets that would mean a very major upswing. So I think there's optimism that I have, generally speaking. For us as a business, I think there's a ton going on. We didn't talk much about the CI deal that we signed, but I think that's an exciting shift for us as a business. We've got a new partner with CI. We ended up with a new product and new set of capabilities that we can deliver to the market more broadly in a set of transfer agency operations and contact center capabilities, as well as the platform itself. So pretty exciting set of capabilities, and we did a similar contract with IGM and have a similar set of capabilities that came out of that contract as well. So huge amount of opportunity for us in that space to grow our business and continue to provide great service for our clients. We talked about financial planning. I think that's going to be something that we'll announce shortly as a major play in financial planning, and for us that means being able to add a new service to our digital wealth platform. And really deliver on that end-to-end journey. So which of course requires that platform as the sort of core of it. So the addition of financial planning makes it extremely powerful, I think, and really beyond what's available in the market today. And then we've got great opportunity insurance. We're looking at some very interesting new data capabilities that we're going to deliver to the market. I can't talk much about them, honestly. So I'm gonna have to be careful here. But I think there's a huge opportunity for us in the insurance business, and the data team that we have is very focused on delivering a set of great capabilities into the market. And then in the institutional investing side, the fund accounting business and the positioning as a sort of investor book of record for institutional firms is something that we're really focused on. How do we provide a true full coverage in that marketplace is one of the parts of that. How do we make sure we do that in a very modern way that delivers efficiency for those firms so that they can reduce the cost of operating and still are able to track and manage all the assets that they have. So very very big year for us ahead. Lots of work to be done. And lots of opportunity with our clients, so that's always exciting.
Absolutely, yeah. It seems like there's a lot to be done in 2023. And as for the CI deal, not to worry, we have an entire episode that will be coming up. The next episode, actually, with Tej and Len Brooks, where we will discuss the CI deal and what that means and how we're transforming the industry, essentially.
Yeah, I think that's a very important partnership for us, and I think the partnership word is one I don't use lightly. I think it's a really important position that we took together as two firms looking at how we can improve upon not only the efficiency of the operations, but also give value to the members that we're delivering that service. So yeah, I think that's a great one. I'm glad you're having that. We'll chat next.
Yes.
Yeah.
Absolutely. Well, thank you, Jamie, for chatting with me.
Thank you,
this has been a very insightful conversation.
Good.
And now for a bit of housekeeping. If you enjoyed this episode, please be sure to share, like, and subscribe, and leave us your comments. And we look forward to seeing you at the next one. Thank you.